Ginnie Mae has announced that they will start issuing 40-year mortgages soon as prices continue to increase for first-time homebuyers. And as a first-time homebuyer, the thought of buying a higher-priced home with lower monthly payments is tempting. But should you? I'm Nick D, and I'm here to give you the Realty on Realty. In the United States, 40% of loans are issued in a 30-year fixed, as opposed to lower terms like 15 years. The typical advice is usually as follows: save 20% for a down payment, get a 15-year loan, and pay it off in 5 to 10 years. And in Europe, the highest maximum loan most people can get is a 25-year loan. Most people stick with the 10 to 15-year terms. But the majority of young first-time homebuyers simply cannot do that in today's real estate market with stagnating wages and quickly rising prices. We've talked many times on this channel about how issues within the housing market and how first-time homebuyers are at a significant disadvantage when it comes to owning a home. There are a lot of things that could be done to help the housing market for first-time homebuyers, but this is one of the only major announcements that come out to try to assist buyers, and there's still a lot of questions that need to be answered, like, can you get a MSHDA assistance on a 40-year mortgage? Is there a guarantee for a fixed rate? Is there an age limit to apply? Regardless, with the information we know, here are some pros and cons of a 40-year fixed mortgage. Pros: lower monthly payment. You may have a lower monthly payment over the term of your loan, allowing you to purchase at a more expensive home earlier. You can get a mortgage faster. Some lenders might have strict regulations and not allow you to get a mortgage at a 15 or 30-year rate. It's more accessible to get a 40-year mortgage. Some lenders might have strict regulations and not allow you to get a mortgage at a 15 or 30-year rate. However, as you would need less money for a 40-year mortgage, it is a faster way to get one. Now here are some cons. It costs you more overall. Let's say that you buy a home with a 40-year mortgage rate that's 3.5% at $100,000. With interest, your true payment on the home is going to be about $186,041, as opposed to a 25-year mortgage where the total cost would be about $150,238. The monthly payments for each respective amount would be $388 and $501 a month. So lower monthly payment, but $36,000 more in that extra 10 years. Not to mention, you're going to be in debt for a greater amount of time. Most people have the goal to be debt-free, to own your property outright, and not to have payment anywhere. But if you're looking to be debt-free, this will be a longer route and you might have to work long enough to pay off the loan. If you paid the minimum amount and got the loan at 30 years old, you'd be 70 by the time you pay it off. And lastly, you'll be barely making a dent into your equity due to the fact that you'll be paying more interest back in your early years. So upgrading homes could potentially be harder when they go to pay off the loan. Using the same example as earlier, if you took out a 40-year mortgage, after 3 years, you would have paid off $3,625 of the original loan. With a 25-year mortgage, after 3 years, you would have paid off about $8,000 of that loan. Personally, I think that this is a temporary fix to allow younger people to own homes, which is a great concept, but I fear that this is yet another trap that will likely get my generation stuck in debt. It's like student loans. School became expensive and loans for students became easier to obtain with lower payments at the cost of longer payoff periods. We're going to have the same situation on our hands here, where the fundamental issues aren't remedied, but options are available that inevitably end up screwing the consumer at the end. And look, some people might argue that this is a good idea because inflation would move faster than your debt, making it more feasible in the long run to pay off. I'm not an expert in finances like this, but from my understanding, this is as risky, it's not promised, and you could be setting yourself up to work longer and not have any kind of retirement plan. Anyway, guys, that's my take on 40-year mortgages. Let me know what you think in the comments below. Please like my videos, subscribe. I want to get to 50 by the end of July, so we're almost there. I'm at, I think, 42 or 43 subscribers. So anyway, guys, thank you so much for watching as always. I'll see you next time.